$245 is above what most people make per day. And with the SPX signal, this is just one single trade. What's going on? It's Ryan here, CEO and head quant at Happy Trader. Today, we're going to be doing the SPX Masterclass. This is going to be a video that you're going to want to dial into. I would put down the phone, put down the social media. This is going to be an important video of how to generate income, reliable income from the SPX. Now, disclaimer, this is not financial advice. I am not telling you what to do. Any use of the phrase you is just because I'm from Philadelphia. So just ignore the you. I'm not telling you what to do. But if I say that you can do this, well, it's all theoretical. So getting that out of the way, this is what we're going to do is we're going to be looking at the SPX only, one ticker, make it as simple as possible. Now, why the SPX? The first thing that a lot of folks wonder is why the SPX? Why not the SPY? Well, first, a couple reasons. The SPY is 1/10 the size of the SPX. So if you want to make income, and in this current environment of the United States of America, you're going to need to trade the SPX, okay? So again, when I say you need to trade the SPX, that means only in the capacity of paper trading. That means only in the capacity of not financial advice. So the thing is, SPX is going to give you the opportunity to make income. Now, when you're using an indicator like happytrader.io, Sentiment AI with the Luma trend, it makes it a heck of a lot easier because now you see it and now you see that downtrend signal and now you don't, and you have absolutely no idea what's going on with the market, but now you see it again and you can see all these different signals, right? So you can see kind of where you can sell your spreads. Now, does this work out on further time frames? Or, oh, I'm not a 5-minute trader. Yeah, it works out on different time frames. So, call vertical spread. Boom. If you get this downtrend signal and you sell a call vertical spread, 5, 8, 12, 15 delta out of the money, bang, that's how you can make some income, right? You're playing off of theta decay, and that's what this video is going to be about, is how to make that income. Now, getting this uptrend signal, we would sell a put vertical spread. So it would be a bull vertical put spread. So your thesis is bullish, but your trade is a theta trade, either at or out of the money slightly, depending on how you want the risk reward to look. Now, what we're going to do is we're going to dig into kind of what these strategies look like. Well, we know that we have happytrader.io. We know that we can set our alerts, and it makes reading the market and how to put on these strategies, these theta strategies, a heck of a lot easier than just looking at price action, MACD, RSI, all the basic stuff. We're able to kind of see, bang, hey, we're not looking at these buy and sell signals because, this isn't super trend like I mentioned in a bunch of other videos. You get wiped out if you trade these signals. We have our special sauce baked into the downtrend and the uptrend signals, and that's what we back test against. If you like and subscribe and you go back at the very least to our channel and you watch some of our other videos, you can see what I'm talking about as far as some of the back testing. We don't go from buy to sell, buy to sell. These are potential trend reversals. So you can look at this as a shell of a free indicator with our special sauce baked in right here on this uptrend signal and this downtrend signal. Now, the income strategy is really simple. I touched on it already. It's selling vertical spreads against these downtrend and uptrend signals. So on this uptrend signal, if you're a 15-minute chart trader, without Happy Trader, you're not really going to know that it went up until it did. Well, with Happy Trader, you get a little bit of a heads up. You got a buy signal, green Illuma trend. You kind of chopping on up. You're not flattening out too much on the Illuma trend here. And then you have your uptrend signal. Me personally, I like to sell at the money. I like the one-to-one risk reward. But if you're somebody who really likes that theta decay, man, I'm telling you, sell out of the money, and that's the way to go. So out of the money is going to be better for theta decay. If you're looking for market direction and you don't mind getting into the trenches and taking a little bit of an initial drawdown on your signal, for instance, here we had a downtrend signal, but it kind of pulled back up before it went down. So, these signals aren't perfect, but they're as good as it gets. They're better than any indicator that you can get on TradingView. We've back tested all of them, and this is a premium indicator. It's not free. So what I'm going to do is just show you kind of on the options chain how you can kind of handle this type of thing. So you can go to the SPX on the options chain. We just have E-Trade up right now, and you can select your strike. So that's the first thing you want to do is find a strike, select it. So we're going to deselect all the strikes. That's the first thing we're going to do. Now, a lot of traders like to trade 0 DTE. Why not make this video about 0 DTE and just keep it simple? Okay, no problem. So, it's 3:46 p.m. I'm going to show you a perfect example of why selling out of the money, far delta on 0 DTE pays off. Because look, there's no premium left. It's all expired, worthless. Now, if we go to tomorrow's expiration, what's going to be the difference, right? It's going to be that we actually have juice there, right? So this is all time decay, everything out of the money, right? All decaying. So if you sell further out of the money, if we look at tomorrow's strike, because it's 3:46 p.m. and the market's about to close while we're probably recording this video or close there too, well, something you can do is come on early in the morning if you do some of your pre-market research, and even if you don't, you get a happy trader signal for a downtrend. For instance, today would have been a great day to sell a call spread. So I'll show you what that looks like using tomorrow's expiration. So there's still some juice on the bone, some meat on the bone, and that's what we want to look for. So the first thing we want to do is get to at the money, and you can see the gray area, and then the black areas are going to be what's out of the money, okay? So that's going to be really, kind of where we're going to want to sell on the call side if we think that we have a bearish thesis. So looking at Happy Trader, we absolutely do have a downtrend bearish thesis. So that's great. We have a downtrend signal. We have Happy Trader enabled. We set up alerts, no problem. Bing, bang, boom, good to go. And now we know, hey, we want to sell a call vertical spread. But do we want to sell it at the money? Well, if we sell it at the money, we're going to take a drawdown. Can we handle a drawdown? Well, I don't know. Can you? Well, I can, right? So you can look at it two different ways. So let's go to the options chain. We're going to look at the at the money. So we can just go to just simple, we'll just default it. So we'll make sure that we're looking at the correct strike is the first thing we want to do. Right now we're not. So we want to set this to tomorrow, the 14th. And we want to set this to, let's go with like 49.40. And there we go. And let's actually do a put vertical spread. We're going to inverse this. We're going to change this back to the 14th. And then we are going to have our trade set up for a snapshot analysis. You can see the credit received. That's a good day's pay. I don't care who you are. Yeah, if you're living in the United States and you're just paying your mortgages, paying your bills like everybody else, 245 bucks is above what most people make per day. And with the SPX signal, this is just one single trade. So, you can kind of do the math and see, you're not dealing with a small instrument here, but look at this, 1-to-1 essentially risk reward. But the actual equity, the price of the equity in the underlying is directly here on this dotted line. So you can see if we kind of zoom in a little bit, it really needs to move just a smidge, right, to this flat line, and then this would be your equity curve, right? So 1-to-1 risk reward ratio, it's about a coin flip, but you have your edge of Happy Trader's downtrend signal giving you the heads up that, hey, a call vertical might be in the cards today. And then sure enough, well, if we look at the way the market's trading, it sure looks like Jeff Bezos really sold off a lot of Amazon in the pre-market from what I'm gathering due to that gap down. So just heavily weighted stocks here getting sold off, which is really FANG. And then you can just see, just the rest of it just goes with it. Tesla's down and all that stuff, right? So going back to the trade, we can look and we can see, hey, so we can put this trade on for a 50-50 at the money, right? And just let time decay, but then the security needs to move, right? So we need this thing to shift. Well, there's another way to get this similar risk reward profile, like I've mentioned in other videos, but with the SPX, you have the potential to make a lot of income intraday trading, 0 DTE, 1 DTE, whatever your secret sauce, special sauce is. You just have to remember that if you're holding overnight, you need to have a mitigation strategy. You need to have some futures hedging or something going on, protective puts. You don't want to go to sleep and wake up with a geopolitical disaster on your hands or some bad pre-market news like a bad CPI report and then have this thing all the way over here and then you're stuck at max loss. You just don't want that to happen. So another way that you can do this is edit your ticket, right? So we can just completely cancel out of this trade. And instead of going at the money, we can skip out to a further delta, right? There's still plenty of meat on the bone. Now, look at this. So we're going from a 50-50 risk reward ratio. And I did a video on Palantir kind of about income trading and why maybe it wasn't the best stock to income trade with. Well, SPX is cash settled, so you don't have to worry about assignment on your short leg, but you do have to worry about overnight risk. You don't want to get your short leg blown through on overnight risk. So we're going to sell, let's say, for instance, a 16 delta. You can even go further out than that, and you can go a certain degree wide, right? Like you can go like 20 wide, right? So you could do do the difference between these two, and this is going to be your max loss. So let's look at the profile of that trade. So we go to edit. We're going to look at the snapshot analysis here. And hey, now we have a little bit of room, right? A little bit of room. So we have that, we make money if the market goes down. But look, the security and the dotted line is already quote unquote in the money, right? So the trade is in the money. And what you can see here is the probability for maximum profit taking that signal and putting on the spread far out of the zone. We're not in the trenches here. We're more like commanding the war, right? We're commanding the battle from the outside. And that's what this selling far out of the money is we're not right in the trenches. We're further out. You're going to have some trade-offs on the plus side. Your trade is already winning. It's already in the money. Your probability for max loss, it's only 2.69%. Probability not just for profit, but maximum profit is sitting at 88.74% to collect your $190 worth of premium, which is really nice for a 20 wide with that kind of 88.74 chance. And you can see it will, kind of at the end of the day, we have about 8 minutes left in the market. You will have this kind of change dynamically depending on, which way this dotted line moves, and that's the underlying security. Now, what can you do to mitigate this? You can set a stop loss. You can go into your ticket. You can make sure that if you're collecting a credit and you're setting, you're putting your trade on for a limit credit, you can do a 1x, a 2x, a 2.5x, a 1.5x stop. So if you're collecting 190, just multiply that by 2, multiply it by 3 or 4 to get your stop. Just remember that you're just mitigating a max loss. So if you put on a 1x stop, you're going to get stopped out at about where you would be. So 190 profit. If you put on a 2x loss, that's going to be 2x the premium. You would just have to edit the ticket. If you put it on for 190, you would just set it to stop limit debit. And that way you have a stop loss on. Now that's for intraday. Overnight, a lot more complicated. You're going to want to put on, potentially hedging strategies and stuff like that. Protective puts, futures hedging, more advanced things. But if you're trading intraday, you're going to have less margin. Your buying power required is going to be less, and holding overnight's not going to be as big of a deal because you can see what happens with your overnight gaps. So that's really going to be the income strategy. You can use this on multiple time frames. We're going to go down to the 5 minute, and you can see that today it's really just been free money to the downside. We opened up for the day. We had a sell signal, a potential trend reversal, and then we had it confirmed with our happy trader downtrend signal. Bang, gap down, and boom, that's how it was, right? So we gapped down, but our signal came ahead of time, right? It came beforehand, and that's nice, right? To be able to get that signal and quote unquote know that, you can potentially, and I need to be careful with my words here, potentially, but more often than not, sell these spreads out of the money and capitalize on the theta decay, even if you get a false signal, right? So, another thing that's important to look at to confirm these signals is divergence in the indexes. So we'll stretch this out, and you can see the SPY, the SPX, the NASDAQ, and the Dow Jones Industrial Average all the way down. We had the VIX spike up 22%. That's just a straight up day of Bezos dumping shares, right? So that's what that looks like to me. You have FANG stocks down, fairly across the board. And then we even have Bitcoin, an ultra speculative appetite. Looks like it's waning, and people are starting to pair some of those profits. So that's going to be what that looks like. So again, you can take these trades on an intraday basis. If you get a cluster of them, you don't necessarily have to take them. But if you get a clean one like this one here, I would go personally. This is what I would do: is do this on paper trading. But what I like to do is take these signals, and if they're spread out far enough apart, I can put on one of the tranches of my day's trade. So if I get one signal and one clean trade, hey, $245, $300 in the bank. If we get a signal in the morning, that's a downtrend signal, and a signal kind of later in the day, that's an uptrend. Well, maybe I'm selling two tranches. Maybe I'm putting a call spread that I'm selling out here, and a put spread, a bullish put spread that I'm selling on this uptrend signal, capitalizing on the theta decay and therefore creating income. Hope that helped you. That was the masterclass on how to use, and it was a condensed one, but it was a very concise masterclass on how to use Happy Trader to be able to create income while also leveraging theta. My name's Ryan. I'm the CEO and head quant here at happytrader.io. Have a great day and happy trading.